Hi everybody, it's Davidbeaton here, and today we're going to talk about Canada's new 2018 mortgage stress test. Are you ready to become a homeowner? Then again, maybe you're already a homeowner, but your mortgage is up for renewal. Or you're looking to upgrade to something more higher end than your current dwelling. Not so fast, because there's one thing that might get in your way. The new OSFI mortgage stress test. All Canadian buyers borrowing from a federally regulated lender will be subject to the OSFI mortgage stress test, including insured borrowers, those with down payments of 20% or more. Lenders will now have to qualify all conventional mortgages using the Bank of Canada's 5-year benchmark rate, which is currently set at 4.99%, or at the current contracted rate plus 2% if that rate exceeds the benchmark rate. So if you're currently pre-approved at 3.5%, you'll now have to qualify as if your interest rate would be 5.5%, which would, of course, significantly reduce your buying power. Well, what is a mortgage stress test and how do the banks calculate this? In finance, stress tests are ways of considering the worst case scenario for any investment. When it comes to mortgages, stress tests determine the risks of each loan application. How much can the borrower afford given their current debt to income ratio? And would they still be able to make the monthly mortgage payment? How would their payments be affected in the case of a temporary job loss? These are all important factors in determining how likely a borrower is to default on their loan payments. And as of this year, starting this month, home buyers will need to qualify not only for the rate negotiated as part of their mortgage contract, but also at their current rate, plus 2%, or the average bank 5-year posted rate. By stressing the mortgage this way, banks will ensure that the borrower will be able to service their loan under pressure should the interest rates climb higher than the current average. The strict stress test, which is meant to ensure borrowers can afford to pay their mortgage at a higher rate, is now being applied to all home buyers, even those with a down payment of 20% or more. Once the tests are in place, it is estimated that it could lower a family's purchasing power by up to 21%. Economists say the stricter mortgage rules will also negatively impact softening housing markets across the country. It is expected that tougher mortgage rules, once fully implemented, will depress housing demand by up to 10%. If you're a home buyer and want to refinance a mortgage, the new mortgage lending rules will be a lot more difficult to negotiate. Should you be worried? If you're a first-time home buyer, the stricter mortgage lending rules will mean you might need to rent for a little longer or wait until your income increases before you can buy a home. Since the purchasing power does not go as far as it used to, first-time home buyers might need to consider something besides a detached house, perhaps a townhouse or condo, or first-time home buyers may actually need to get a co-signer to qualify under the strict new rules. There are other options though. Keep in mind, the stricter mortgage lending rules only apply to those home buyers looking to secure a mortgage with one of Canada's federally regulated mortgage lenders. The restrictions would affect about $15 billion a year in new borrowing, particularly in Toronto and Vancouver markets that have had the steepest run in prices in recent years. That being said, the tighter rules could disqualify as many as up to 12% of borrowers in the two cities, which account for half the value of homes sold in Canada. But listen, it's not all doom and gloom. Back in 1988, if you can recall or if you heard of, interest rates at that time spiked up to 22%. I myself was a realtor at that time period, and I can tell you it was a very, very difficult process for people to not only sell their homes, but to qualify for a home as well. And there was a lot of creative ways to arrange financing back then that had to be implemented. But remember, interest rates will never ever climb up to those high increased periods that we've experienced back in 1988 era. And again, rates are so affordable today that even though we are facing some of these stress test rules and other initiatives that the federal government is implementing, it's still a great market to purchase a home. We just have to find what's best suitable for us and our family as far as getting the financing concerned. That being said, it was great reaching out to everybody out there, and this is one of many videos that I'll be sending out to everybody. And if you have any questions, feel free to contact me anytime. You can always contact me directly at 905-626-5333. Thank you for tuning into this week's vlog. Stay tuned for more, covering many aspects of real estate. As always, David Beaton giving you the edge.